From the US this morning, Donald Trump has signed an executive order softening select auto tariffs that were implemented just earlier this month. And according to the new order, a 25% tariff on imported vehicles remains. Under the new order, additional 25% tariffs on auto parts that were set to start by May 3rd would also still take effect. But vehicles that go through final assembly in the US will be able to qualify for partial reimbursements on those levies for 2 years. He also spoke specifically on India, talking about that trade talks with India on tariffs were coming along great and expects both sides to strike a deal soon. And these comments come after Treasury Secretary Scott Bessent saying that US was very close to India. And do remember, US Vice President J.D. Vance met last week with Prime Minister Modi as well. So things are building up, at least in favor of India. And when it comes to the tariffs, you can already see that stance change.
So Aisha, you look at it objectively, that when the tariff was announced, you pretty much knew that all the bad news was out. It was always about, the word which we use that, look, the ceiling, whatever negotiations will happen, it will happen below the ceiling. So, the tariff negotiations are moving as per the script. First, there was this number, and now the renegotiations, which is the way how negotiations move, they're happening at a much lower number. And in fact, US clearly seems to be blinking an eyelid, realizing that tariffs are more like a self-goal which will hurt them more than it will hurt the world. So nobody is benefiting out of this entire tariff interplay, and I'm glad that that realization seems to be kicking in. So first we talk about auto. Auto is critical, auto is crucial, and auto is important largely because auto is a large component when it comes to the US import bill, and auto is also a very large space which represents manufacturing and had potential to essentially kickstart the US manufacturing sector. But the fact that auto tariffs have been rolled back by the US administration, it clearly means that the US administration is aware of the compulsions which clearly are at play. That's one part. So now I think progressively what you will see is that progressively you will see item by item, category by category, where the tariffs have been high, but where the US dependence on the global trade or global imports is high, those tariffs, in a sense, there would be some compromise and a large rollback which would happen. That's headline number one for me. Headline number two, Aisha, is very India specific. I think for the first time, the US administration has really vocally spoken about a large trading partner that, look, we are there. We would be announcing the tariff deal with India very soon. To give an example, that India never retaliated. China retaliated, Europe retaliated, Japan retaliated, Australia, India are the two large countries which did not retaliate. So I think this entire approach what Indian government has had, which is that, let's talk, let's have bilateral talks, let's not retaliate, I think is working in our favor. I think that is something which is now visible in the kind of comments which are coming through. See, Aisha, the current tariff baseline is 10. US administration made it 26. The negotiations will happen somewhere in between. It will not be as low as 10. It will not be as high as 26. True. Now, is this 15? Is it 12? Is it still 10 in some categories? I don't know. But for me, I think there is one thing that India will get huge advantage in terms of the current equation with other countries, and B, wherever there are compulsions, I think the US administration has realized that increasing tariffs is hurting them more rather than treating this as a punishment. So autos, pharma, chips, electronics, these are critical categories where US cannot replace them overnight. I think that's where you will actually see compromise or perhaps a large rollback. So I think for India, I would like to call out pharma. See, auto was never a gray area for us. It's pharma now, where I think the negotiations would be reasonable.
Given that services are already exempt. So
yeah, you think about it. What was autos? Auto is a large sector. US is importing autos, at least from China. It had potentially could have created a large manufacturing chain, and it would have created a large job, market. But the fact that tariffs have been rolled back, that means that US is not ready to make their own cars which would be affordable and which would be acceptable by the US consumers. Very simple.
Yeah, absolutely. And I think more importantly, in terms of messaging, many were also believing that this 90-day period will come and go and there won't be any conclusive decision at hand. So it seems like this reprieve and pushback on the tariff implementation deadline, finally things are at work. And we should see something material come by after this 90-day period actually ends. But here's how the global markets are placed this morning. And you've got the 10-year Treasury yield, which has declined. Investors are awaiting key economic data at 4.16% in the US. Oil has slid about 2% as OPEC Plus output fears and trade tariff worries wane on the demand when it to crude. And gold has fallen about 1% as US-China tensions are sort of seeming like they've at least simmered down a little bit, and investors are eyeing the key data in the US. So here's how the handover has been, and in fact it's been positive for the US equity markets overnight. And you've got the Dow, which has got a good gain of about 300 points at hand. S&P 500 index managed a 0.5% gain, as did the Nasdaq. What about Asia this morning? Is it picking up the same sentiment? Definitely not our Asian counterparts, not Hong Kong, not Shanghai. They are a little bit tempered and mildly soft in trade. Australia, of course, is marginally higher. And Japan as well, just absolutely flat with a marginal positive bias. What's the GIFT Nifty indicating then? A little bit of a negative start. If we can just bring up the implied open and tell you how it's currently positioned, about 100 points lower. So it seems like right now we're headed in for region underperformance. But again, tomorrow is also a trading holiday, so maybe just, some adjustments because of that truncated week. But yeah, other than that, a lot of other talking points. And our markets, while it was a very tempered session and very range-bound, so to speak, every uptick got sold into, every dip got bought into. It was really polarized in the sense of, earnings and news-specific reactions.
So where are we standing, Aisha? We are up by about 12% from the April low, 5% in absolute terms in the month of April. Now, 12% from the low is a magical recovery, and that's about 20% for the mid and the small cap index. And 5% in absolute terms for the Nifty in the month of April, and April is not over. We still have the last day. I think it's a magical kind of comeback for the market. From the painful fall to this grand recovery, April has really been like peak and turfs and twists and turns. Why? Because FIs have come back. Why? Because there were no IPOs. Why? Because DIs are buying. There is no fundamental change in terms of the macro parameters, right? But there is a fundamental change in the way how suddenly looking at the market, both in terms of approach and in terms of liquidity. So what are the questions? I mean, the questions what you want to ask is, will this FII buying continue? First. Second, you would say, how much of the market is going up because of earnings and how much of the market is going because of liquidity? C, is it time now to look at outside the comfort of banks? And is the sectoral rotation on? Now, if I connect all these 4 points which we just have, I think you can summarize the market with the following. That I think when FIs are back, Aisha, they normally don't come for 10-15 days. It's a string and it's a pattern which is at play, and I think this pattern will get extended currently because India is getting all the right headlines. B, earnings upgrade is not major, which means upside in the market is not going to be very large, so we are not going to make a new high anytime soon. Third, banks, and that's where you want to spend a time, and you would say banks, Aisha, I think they were an obvious play. Now they're obvious overbought. So, everybody kept on shouting from the rooftop for 2 years, bank low, bank low, bank low. Now that time has come, but everybody already owns banks. So the surprise for banks to go higher after these numbers, the numbers are out, and with this outperformance, I think is limited now. So I expect banks from outperformer to become market performer. The trade in banks is buy small banks, because they will have to catch up. That's one trade. And the second trade, I think, is watch out for sectoral rotation. The laggards now will start becoming leaders. We've seen evidence of that yesterday, defense, PSU. So I think that's the trade for next few days. The trade for next few days is catch small banks which have not participated and hunt for laggards, which were the erstwhile leaders, now are backbenchers, their potential to catch up. I think the next few, and it is the catch-up trade or the so Johnny come lately crowd, "Arey market upar ye nahi chala, le lo." That kind of a thing.
Yeah, absolutely. But when you talk about banks, maybe one of them could get, sort of left out from the list, and that's going to be perhaps IndusInd Bank. And I just want to bring up, what's really happening with IndusInd Bank for the better, for our viewers. The bank, remember, has issued an exchange notification just last evening that Sumant Katpalia, the MD and CEO of IndusInd Bank, has resigned from his current role, effective immediately. And this after the recent developments related to accounting of derivative transactions. Now, the question is, how is it that you're going to look at this from an external shareholder point of view? The management change, perhaps at a time when there was so much trouble brewing in the bank, is the best case scenario, right? You would want uncertainty to come out. He's already stepped down, as has the entire top brass. So nothing better than that. In terms of damage on the stock, like we were discussing last evening as well, much of it is already behind us.
So Aisha, banks have derivative losses, and it is something which we've unfortunately seen at a global level as well. The point is that in this case, is there a problem? You know, a lot of messages are floating around that is there a problem in the bank, is there a problem in the balance sheet, is there a problem in terms of the basic franchise value? The answer to that is no. Look guys, this is a derivative loss, and a derivative loss is something which was overlooked by the management, something which should have not been overlooked by the management. At least the top brass should have been aware about what the treasury operations were. So RBI is clearly not very happy with the way the bank has conducted themselves. IndusInd Bank never got the act together after the LNFS crisis. It's been a string of problems they've been running in and out of. I mean, they almost survived in 2020 when it comes to COVID. They had a, when growth came back, they started doing aggressive lending, and 3 quarters ago, they took this huge MFI hit and this entire derivative loss. What RBI is saying is that, look, folks, you've not done your business and you've not fulfilled your fiduciary duty. And I think that is where the entire RBI a diktat has come through. What it means for the shareholder? Well, Aisha, just imagine that you waking up to a news that a bank does not have its top leaders. So it's a process, right? A new leadership team has to be nominated. That has to be approved by Reserve Bank of India. That team will have to perhaps, answer a lot of hard-hitting questions for investors, and it's a process. You are in a competitive market, and when you don't have decision making at the top happening, who will take daily decisions? Because it's not one CEO, it is the deputy CEO, the CFO place I think is also vacant. So suddenly the bank, if I may use the word, is headless. So you have who will take these decisions, when will it come through? It just adds that extra dimension of uncertainty. So I will not be surprised that because of market sentiment, the recent low of 650 could get retested in IndusInd Bank, because why would you buy it? I mean, you got a nice rally happening in HDFC Bank and ICICI Bank which are delivering. Why would you go and go on a dark alley where you don't know where the light at the end of the tunnel is? Because I don't know how long the tunnel is. Kaun naya CEO aayega? Who will RBI nominate? Where will the committee come from? Next quarter, what will happen to numbers? When will IndusInd Bank come with numbers? There are so many questions.
If you like this video, then like, share and subscribe to ET Now.